Why do people invest in the stock market? How do people earn profit from stock market? Why do people buy shares? Yes, today we give you answers to your questions. Definition. What is the stock market? A stock market, equity market, or share market is the aggregation of buyers and sellers of stocks, which represent ownership claims on businesses. These may include securities listed on a public stock. The stock market broadly refers to several exchanges and other venues in which shares of publicly held companies are bought and sold. Such financial activities are conducted through institutionalized formal exchanges, physical or electronic, and via over-the-counter (OTC) marketplaces that operate under a defined set of regulations. Stock market and stock exchange are the same? While both the terms stock market and stock exchange are often used interchangeably, the latter term is a subset of the former. Traders in the stock market buy or sell shares on one or more of the stock exchanges that are part of the overall stock market. Please subscribe to our channel Rugged Capitalist, like, share, and comment. And hit the bell icon button for new and more quick notifications. USA famous markets. The leading U.S. stock exchanges include the New York Stock Exchange, NYSE, and the NASDAQ. These leading national exchanges, along with several others operating in the country, form the stock market of the United States. Understanding points. Number 1. Stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations. Number 2. Stock markets are vital components of a free market economy because they enable democratized access to trading and exchange of capital for investors of all kinds. Number 3. They perform several functions in markets, including efficient price discovery and efficient dealing. Number 4. The U.S. stock market is regulated by the Securities and Exchange Commission, SEC, and local regulatory bodies. Investor protection. The stock market has many wealthy participants and institutional investors, but it also has a large number of small investors. Some of these investors have limited financial knowledge and may not be fully aware of the pitfalls of investing in stocks and other listed instruments. For this reason, the stock exchange implements some measures to shield investors from financial loss and ensure customer trust. For instance, a stock exchange may categorize stocks in various segments depending on their risk profiles and allow limited and high-risk stocks. Exchanges often impose restrictions to prevent individuals without the necessary credentials to get into risky bets like derivatives. Balanced regulation. Listed companies are regulated, and their dealings are monitored by market regulators such as the SEC. In addition, the exchanges set certain requirements, for example, mandating timely filing of quarterly financial reports and instant reporting of relevant corporate developments, to ensure that all market participants are equally informed. Failure to adhere to the regulations can lead to suspension of trading and other disciplinary measures. Regulating the stock market. Most nations have a stock market, and each is regulated by a local financial regulator or monetary authority, or institute. The SEC is the regulatory body charged with overseeing the U.S. stock market. The SEC is a federal agency that works independently of the government and is undead under all pressure. The mission of the SEC is stated as protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Keep supporting by subscribing, liking, and sharing. Understanding the stock market. The stock market allows buyers and sellers of securities to meet, interact, and transact, in person or electronically. The markets allow for price discovery for shares of corporations and serve as a barometer for the overall economy. Since the number of stock market participants is huge, buyers and sellers are assured of a fair price and a high degree of liquidity as various market participants compete with one another for the best price. A stock market is a regulated and controlled environment. In the United States, the main regulators include the Securities and Exchange Commission, SEC. Traders are regulated by the Financial Industry Regulatory Authority, FINRA. Since the stock market brings together hundreds of thousands of participants who wish to buy and sell shares, it ensures fair pricing practices and transparency in transactions. Stock trading information. Record high inflation and stock market volatility related to war, supply chain issues, and rising interest rates can unsettle even the most experienced investors. And most investors would be well advised to build a diversified portfolio of stocks or stock index funds and hold onto it through good times and bad. but investors who like a little more actively engage in stock trading. Stock trading involves buying and selling stocks frequently in an attempt to time the market. The goal of stock traders is to capitalize on short-term market events to sell stocks for a profit or buy stocks at a low. Some stock traders are day traders, which means they buy and sell several times throughout the day. Others are simply active traders, placing a dozen or more trades per month. Investors who trade stocks do extensive research, often devoting hours a day to following the market. They rely on technical stock analysis, using tools to chart a stock's movements in an attempt to find trading opportunities and trends. Many online brokers offer stock trading information, including analyst reports, stock research, and charting tools. Bull markets versus bear markets. Bull market. Neither is an animal you'd want to run into on a hike, but the market has picked the bear as the true symbol of fear. A bear market means stock prices are falling. Thresholds vary, but generally to the tune of 20% or more across several of the indexes referenced earlier. A bull market typically means investors are confident, which indicates economic growth. A bear market shows investors are pulling back, indicating the economy may do so as well. The good news is that the average bull market far outlasts the average bear market, which is why over the long term you can grow your money by investing in stocks. What is an index? An index is a method to track the performance of a group of assets in a standardized way. Indexes typically measure the performance of a basket of securities intended to replicate a certain area of the market. These could be a broad-based index that captures the entire market, such as the Standard & Poor's 500 Index or Dow Jones Industrial Average, DJIA, or more specialized such as indexes that track a particular industry or segment. What is a stock market crash? A stock market crash is a sudden and big drop in the value of stocks that's caused by investors selling their shares quickly. That drives down the value of stocks for other shareholders, who also start selling their shares to try to cut their losses. The result is that people could lose a lot of the money they invested. Number 1. The coronavirus crash, 2020. In March of 2020, the COVID-19 pandemic triggered the most rapid global crash in financial history. Still, the stock market recovered ground pretty quickly, and the year closed with record highs. 0.8 In fact, economists are now saying the recession from the coronavirus crash was the shortest on record, only lasting 2 months. Reasons to feel cautious about the stock market in 2022. High inflation. Between all those stimulus checks and supply chain issues, we've seen a dramatic increase in the price of, well, everything, especially in grocery stores and at the gas pump, which has led to investors being cautious and consumers spending less. Rising interest rates. To fight inflation, the Federal Reserve started raising interest rates in early 2022, and there could be more rate hikes on the way soon. While this could slow down inflation, it could also trigger another U.S. tensions in Europe. Russia's invasion of Ukraine sent shockwaves around the world and could cause investors heartburn over the next few months. But if history shows us anything, the stock market usually recovers and is higher a year after major geopolitical or historical events. Point 13 So hang tight. Reasons to feel optimistic about the stock market in 2022. COVID-19 fading. As the coronavirus crisis eased, putting the Delta and Omicron variants in the rearview mirror, we've already seen more optimism, movement, and spending. There's a lot of pent-up energy in our country, and people are ready to get out and about. Unemployment falling. In April 2022, the unemployment rate remained steady at 3.6%. That's the lowest level since February 2020, right before the pandemic started to wreak havoc on the U.S. economy. That means more people are continuing to look for jobs and are finding them. New industries growing. Specific industries, tech, e-commerce, and biotech, gained tons of ground during the pandemic and will continue to grow and give investors reason to feel confident. Today advice. The loss gives you some new for doing. But don't lose hope. Because win waiting you, but this one requires some time.